take us through what you're making of the market movements we're seeing today. We've had many saying that the markets seem to be running out of steam despite the positive momentum that's kicked in today, and that it's heavy and it's running out of energy. Your view?
I think the markets have definitely run out of steam. If you look at trading volume on the day, we've only hit just over 2 billion. I think a lot of investors are sitting on the sideline, waiting for data out this afternoon out of the States, your GDP numbers, and some numbers out on our side.
Of course, that 25,000 mark has been marked as that key level to watch, because the trend has shown that every time it gets there, we don't seem to see the market actually holding. So if we're looking at a pulling back before we see a sustainable uptrend here, at what point do you see this market having gained enough steam?
I think in terms of the all share, we would need to see us go up to 25,800, 25,900, over 26,000 to really reflect a sustainable break above the 25. And if we move on that level for the next couple of days and we don't really get any good data out, we could see us come back below that 25,000 level.
Of course, when it comes to news moving the markets today, all eyes are on the news out of MTN and Bharti, both in the equity and currency segments. What are you pricing in here?
In terms of, sorry Alishia, I couldn't hear you there. Could you please repeat the question?
Just with regards to the MTN and Bharti deal, we've got all eyes focusing in that direction. What are you pricing in at this stage of the game?
Well, the rand's been quite steady, supported by the resources. There's speculation announcement that that's come out to say they might stall for another 2 weeks. So the rand not really reacting to that news until we get something definite from there. I think investors are going to perhaps sit on the sideline.
Of course, while they sit and wait on the sideline, they've got a lot of economic data to contend with on local turf. I mean, we've seen growth in private sector credit slowing to a 5-year low. The country's M3 money supply also came in better than many economists had forecast. Any reaction to that data that was released this morning?
Market's been very quiet, like I said, in terms of volumes, not much, reaction. In terms of, the credit numbers, them coming in that low. I think the last level we really saw them at was 1964. That really should be bad for banks, and we can see that banks are up on the day. In terms of the stock, in terms of volume traded, the investors are still trading in those stocks. So really, I think in line with expectations. So really investors perhaps still, those are the only stocks that our investors are really dipping into at the moment.
Well, certainly it seems that we've got, consumers still under quite a bit of pressure. And when it comes to consumer-based stocks, I mean, Pick n Pay announced that it expects a 3 to 10% rise in first half headline earnings per share. What's your reaction to that forecast?
In terms of Pick n Pay, Alishia, I think the market was disappointed. The numbers came out worse than expected. The announcement that came out yesterday afternoon was quite bland. They weren't really, they didn't give reasons for their expectations in terms of earnings. And one can really expect that they are probably going to be coming under pressure in terms of margins, their costs, Eskom tariffs coming through. And, we might see, sales coming off. In terms of the consumers with lower food inflation coming off.
Looking at trade data moving forward into this afternoon, because many are saying that's what the rand would react to moving forward. Many suspecting that the data is going to show a sustained increase in export growth. Are you in line with that consensus?
Well, I think in terms of the trade balance, Nedbank is expecting the trade balance to remain either fairly flat. We have run in terms of surplus in the last 3 months. Just in terms of exports, I think we're probably going to remain robust. In terms of the numbers. I don't think we're going to see an increase from the previous months, because we're seeing a restocking globally. But one always remains cautious, because we're not investors are, really
Yeah.
trying to see if we're going to see a demand come through.
Of course, what is encouraging for that demand is the fact that PMI data out of Asia this morning has been positive, but it still seems to be hard to gauge gold shares or platinum shares or any others in the resource space for that matter. So how are you playing the resources right now?
In terms of the resources, we'd remain very cautious. In terms of the manufacturing and PMI numbers that we are getting, we're seeing it. Really think that it's a phase. We've come off a massive destocking phase, and manufacturers are now starting to hope for them, that we have come out or are coming out of a recession, and so they have started restocking. Unfortunately, you don't know at what point they're going to stop their restocking and wait to see if they've really accumulated enough before they see signs coming through for demand. So quite cautious. I think, we might be quite toppish at the moment in terms of our resources.
Very quickly, just looking at a company that's in that space, Harmony Gold Mining, having reported a 4% rise in total gold output for the third quarter. It expects a marginal rise in the next quarter. Surely a figure like that isn't too encouraging, especially where cash costs have risen by between 9 and 12%.
Yes, no, I don't, not feeling very positive on those numbers. I think if one looks at the numbers, we see that they're expecting a price of 240,000 Rand per kilo, which is way below their margins. When one looks at the numbers, they really need about 250,000 just to kind of cover costs. And with the strong Rand where it is, and gold trading at $1,000 an ounce, really not positive for them in terms of their cost management. They're really going to have to look at, in terms of production, maybe in terms of their spending, where they're going to be moving in the next 6 months.